Good day to all. My name is 𝗪𝘆𝘀, iFAST Research Analyst. The rally by the big tech giants has resulted in an overconcentration within the Nasdaq 100 index, and a special rebalancing will be performed to redistribute the weights on 24th of July. While this reshuffling may cause some ripples in the near term, it's essential to remember that in the grand scheme of things, this event does not change the underlying equity valuations of these securities. For those with a vested interest in the tech sector, the Invesco 𝗪𝘃𝘀𝗁 Trust ETF has long been a reliable option. This ETF tracks the Nasdaq 100 index and offers investors exposure to some of the biggest technology giants like Apple, Amazon, Microsoft, and more. Of course, if you're keen on the tech sector but want to explore beyond the traditional options, the Invesco Nasdaq Internet ETF is another great alternative. Focusing on companies primarily engaged in internet-related businesses, this ETF opens up new opportunities with a greater focus on the tech sector. And let's not forget about the Fidelity Global Tech Fund, which is another exciting prospect for tech-loving investors, with a global focus on tech companies. Now, as the index rebalance kicks into gear, some may find themselves wondering whether it's time to panic or overhaul their entire investment strategy. However, it's essential to remember that the rebalance is a relatively minor change in the grand scheme of things. While it may cause some temporary fluctuations, the long-term prospects of the tech sector remain promising. However, after the sharp rally in tech stocks this year, it will be prudent for investors to be cautious before investing large lump sums into this sector. That being said, with the world increasingly digitalized, a core exposure to the tech sector remains important for long-term investors. Therefore, we recommend investors adopt the strategy of dollar cost averaging. To get the full analysis, scan the QR code or click on the link in the description below. Next, 𝗪𝘆𝘀 will share with us more about Commonwealth Bank of Australia. Over to you, 𝗪𝘆𝘀.
Hi, my name is Colin, Portfolio Manager at iFAST Bond Research Team. Commonwealth Bank of Australia, otherwise known as CBA, is one of Australia's oldest and largest banks. CBA has reported strong performance in the first half of fiscal year 2023. Operating income recorded a strong 12% year-on-year growth, which offset higher operating expenses. This drove a solid 18% year-on-year jump in pre-provision income and a 9% year-on-year growth in net profit after tax. In particular, CBA's net interest income improved strongly. This can be attributed to the recovery in loan volumes and a higher net interest margin. This also underscores the bank's ability to navigate challenging economic conditions and generate strong growth. But CBA's strength doesn't end there. Its credit profile remains robust. The bank was able to maintain a strong capital position. So CET1 ratio maintained at 11.4%, firmly above the regulatory minimum of 8%. On an international level, CET1 ratio was 18.5%, which ranks high amongst global peers. CBA's liquidity also remains healthy. High-quality liquid assets have increased by close to 10% year-on-year, which has kept the liquidity coverage ratio and net stable funding ratio above the 100% regulatory minimum. Overall, we think the credit profile for CBA remains strong. The bank remains well provisioned with better credit quality. It also has a strong liquidity and capital positions. And the earnings outlook is also promising. For investors looking for Australian bond opportunities, we recommend CBA's 6.86% 2032 bond, which has a shorter years to maturity and an attractive yield pickup. If USD-denominated bonds are more aligned with your investment preferences, we recommend CBA's 4.5% 2025 bond. For those seeking a safer option, CBA's senior unsecured 4.2% 2026 bond is also an attractive choice. Investing in CBA presents a compelling opportunity to tap into Australia's bond market for a strong issuer. Whether you are looking for higher yield, USD-denominated opportunities, Tier 2 or senior unsecured bonds, CBA has something to offer. Take advantage of this exciting time with one of Australia's leading banks. To get the full analysis, scan the QR code or click on the link in the description below. That wraps up for the sharing this week. Catch us again next week for more investment ideas and updates.